Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, May the 20th. My name is Eric Wilkinson. Some of you guys may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. I'm here to teach you guys some different strategies you can implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. All right, well, enough about the economic data. That was it. We do have a couple of Fed governors speaking today, so keep your eyes out for that. That's about it. And Tesla for the most part. We'll throw up a chart of Tesla, I guess, now that I mentioned it. All right, crude oil, slightly moving higher. It's still in that 60 handle. Remember, I've been talking about this. Much rather see this with a 50 handle, maybe even the high 50, mid to high 50s, I think is probably best case scenario for this type of economy. Anything moving higher than that, I just filled up my gas tank today, and of course it was about $50 to fill it up. Now, anything moving much higher than that, that was right at $3 a gallon. So remember, when we were at $2 a gallon, that was right around $30. Now we're at $3 a gallon. That's putting us closer to 55, 50. $6 a barrel, something like that, or $56 to fill up your tank. So we're talking about that difference between the $2 a gallon, I should have said, and the $3 a gallon. The $2 a gallon costing us about $30. The $3 a gallon is costing us a little bit mid $50 a tank. Sorry. I don't know why I keep getting barrels stuck in my head. Anyway, all of that being said, if you're driving a lot during the week, maybe going through a tank of gas in a week, that's $15 a week that could have been spent elsewhere in the economy. And think about every single person out there on the road driving daily and how they could have spent their extra money. That creates the velocity, and because everybody spends their money differently. You might go out and buy a coffee. I might go out and buy a baseball for my kid. Somebody else might go out and, what else could be for $15? I don't know. Could be anything. A present for somebody. Who knows? A thank you gift. I don't know. But maybe they're spending a little bit extra on those things too. So all of that creates velocity of money because the money is spent elsewhere in the economy. And then those little people end up spending that $15 somewhere else for something else. Maybe it's to increase business or whatnot. Anyway, crude oil still slightly in positive territory. We could see some weakness as the equities were showing weakness earlier on today. Gold futures trying to hold on. Friday, the last day we traded, Friday, gold was coming off as equities were coming off, which was a little bit bizarre. You would think that maybe there would have been a flight to safety, but we didn't really see that show up in gold futures. They are back below that 13 handle, and it looks like they aren't going to make an attempt anytime soon to recover that. All right. Bonds just slightly off on the day. They had a big rally on Friday as well. The fact of the matter is these guys cannot continue to move much higher. I've been talking about this. The Fed, I don't believe, is going to lower interest rates. The economic data is not showing that we are close to a recessionary type of economy. We need a bunch of these numbers to start coming in bad and relatively quickly in order to see that happen. And I think that the Fed would be behind the curve anyway. So 2019 for interest rates going up or down, for that matter, I think is out of the realm of possibility at this point anyway. We've got the VIX futures trying to move higher as we see the equities off on the day. You can see Dow Jones Industrial Average is off by about 55 points. It was off by about 150 points right off the bat. Early this morning, market opened up and slammed to the lows. We've seen a bit of a reaction to the upside, but that weakness is starting to trickle back in here right around now, which is noonish Eastern. All right, NASDAQ off on the day by about 100 points, really getting drugged down by the technicals or by the tech sector and the technicals for that matter. You can see we got that's pretty much an engulfing pattern to the upside, and then today slamming down right back down to the point of control. I've been talking about this. We could see this market test the extremes, but for the most part, I think what we're going to see is it bouncing right around this area that we're in, right around the 74. It could go all the way down to maybe 7,000. I don't think we're going to see that happen, but this 72.28 Fibonacci area is definitely something we need to be mindful of. I think it could easily test that. And then right around this area, there is another little bit of a support, but that is, or maybe a target, that is a long ways off. And I don't think that the data is showing that kind of need for that. But we know that the markets can be irrational longer than we can stay solvent. So we also have to keep that in mind as well. All right, EMA and S&P is off by about 13 points right now. They were off by 20 some odd earlier this morning, and this is what we're looking at. Overnight inventory pretty flat, but coming into the day session, you can see that bearishness really trickling into the overall market. As soon as the market opened, it looked like they made a bit of an attempt to try and flush out that overnight inventory that was predominantly short. So the day session tries to flush those out, but you can see it's really starting to see that weakness start to trickle back in here after flushing those guys out. We could easily see it come back up to right around 28.61. That might be a big push to the upside, coming back to unchanged on the day. But that's where the previous day's point of control is. So the market is going to want to try and trade that during the day session, try and get that point of control out of the picture for future trade. All right, let's talk about a couple of trades that I've done. SPY, this is the trade that I basically put on Thursday and decided to take it off because it was a technical setup to put it on. And if my fingers are in the wrong place, I typed the wrong thing, right? So SPY, we put this on Friday, was expecting to move higher. I didn't get out on it on Friday's move because you can see without the overnight session, this didn't look too bad. It was actually looking like we might get a bit of a turnaround. So I held it on just for today to see, or waiting for today to see if that was going to be a confirmation and we get a move to the upside. Today we broke down below that and I decided to pull the ripcord on this. So in my IRA I had on SPY and did the June, bought the 290 calls in there for $4.02. I dumped out of those at 196. Whoops, 96. So I'm out of that in my IRA, and over there in my margin account, I went with the SPX and did the June as well. But I went in and bought the 2,960 calls in there in the SPX. That's what this should be. Which is the biggie. So SPX, the 2,960 calls in June. I bought those for $12 and dumped out of those for $4.40. So a loss on both of those. But as the technical setup is, I got out on the technical breakdown from that trade. So I'm out. Everything else is still riding. I'm going to sit on my hands for a little bit here. The way the market's really juking and jiving around and volatility really just not in the trades that I want. I'm going to hold off and kind of let this start to play out. Maybe it's going to, stay right here. And then that would have been a great time to be selling that premium. But I'm going to wait till there's a bit more clarity as to this market. All right. And as for what I was talking about, I did say I was going to throw up a Tesla chart. And it is not looking too good, as you can see here. Although it did come down and test this 194 area, we do have a pattern here where it's starting to look like we're finding a little bit of a bottom here. So we're going to have to keep an eye on that. Any move higher, maybe to cover some of these gaps, could be in the works. But you can see right now, we get this long, thin, strung out line here. Price isn't really being accepted at these levels. So therefore, the market should, because all of this is overhead, short inventory, riding this out, we could see this market make a move to the upside. Now, especially that everybody is talking so bearish about Tesla. So that's usually when you're going to start to see that market turn around. But we've got that line set up, came down, tested it, and starting to move up and away. Any kind of confirmation to the upside is going to be pretty bullish for Tesla. And they are going to fight tooth and nail to keep that above 200 today. So that's going to be pretty good at the end of the day to see what happens there. That's all I've got for you guys. Check out this week's webinar. It's going to be a really good one. I don't have any special webinars happening, but Thursday we're going to be continuing on with this. We come up with an assumption all the time in market direction, but then it's finding the right strategy to fit that environment around that underlying. That is the most important, and I go through how to find that in the weeds so that you guys can increase your probabilities of success. All right? So if you can't take that, take it easy.